Hi, it's Heather Smith here. Welcome to the Accounting Apps podcast. I think you're really going to enjoy this interview. Adam Riches, CEO and co-founder of Netgain, has a really deep understanding of the history of accounting and clearly loves the balance and insight surfaced by accounting and how accounting can impact us on both a micro level within a business, but also on a macro level as regions absorb modern accounting technology. Adam comes from the larger end of town, the NetSuite end of town, and his perspective is from that angle. It's through hearing different perspectives and experiences that we grow as a community. So as we lead into the interview, I'd like to let you know that I do strategically partner with Netgain. I'd also like to remind you to keep up to date with the modern accounting technology landscape by subscribing to the Accounting Apps podcast, the Accounting Apps newsletter, and join the conversations happening in the Accounting Apps mastermind community. I'm your host, Heather Smith, and I'm pretty easy to find on all social media platforms. I look forward to connecting with you. Today, I'm joined by Adam Riches, the CEO and co-founder of Netgain. Prior to joining Netgain, Adam was part of a strategic initiatives team and the Finance Centre of Excellence at NetSuite, providing roadmap guidance, thought leadership around finance and accounting, as well as NetSuite implementation best practices. Adam's impact included the development of key features of NetSuite's Suite Success methodology and product. Prior to joining NetSuite, Adam was the controller of multiple publicly trading mining companies in the Denver area. His areas of expertise included international accounting operations, financial reporting, internal controls, finance transformations, and of course, NetSuite. He began his career as an auditor with Ernst & Young and is a CPA with a master's degree in accountancy from Marriott School of Management at Brigham. Hopefully I've said that correct. Brigham Young University. Hello, Adam. Welcome to the Accounting Apps podcast. How's your week been?
Hello, Heather. It's a pleasure to be on. My week has been fabulous. We're here in the Sydney area, and it's been kind of heads down working for a couple of months. But we just took a short vacation to New Zealand, and so it has been a wonderful week. We just got back yesterday.
New Zealand is a lovely place, especially at this time of the year. So it's lovely that you got to go across there. So I wanted to briefly ask you, you seem to have loved accounting from a very young age. When did you start down your accounting journey? When did accounting spark you as a youngster? Something to do?
It's funny. You asked this question. I always thought it was in college when I was studying different topics. I was always fascinated with business, and I knew that accounting was the language of business. But I look back, my mom had put together a photo album, and I have an accounting certificate from my 8th year of school, where I took an accounting class and was able to pass and get my certificate. So I guess earlier than college. It's always kind of been there.
Yeah.
But it's always been the logic and I like the structure, the format, and there's the right and wrong, the balance, the debits and credits of accounting that always just seem to strike a chord with me that I fell in love with.
That was what I liked, the balance and the tranquility of accounting. Thank you for sharing that with us, Adam. So, Adam, what is your perspective of how accounting software has been developing over perhaps the past decade or so?
It's interesting. There's a big movement, especially if we look over the last 10 years. There's some great solutions that have really risen to the call of the needs of the accounting profession, and especially with the movement to cloud-based software as a service model. I think we've seen some benefits of that. I think if we go back further. It's kind of an interesting question because I think it's all relative, right? I think we have seen gains. I think it's been good over the last decade. But I think if you compare it to like the logistics side of the world, right, where you can now track a tube of toothpaste as it comes up the street and is delivered to your house. I think there's been professions that have had huge gains through technology over the last 20 or 30 or 40 years. And I think accounting has absolutely not been one of those. I think we've been kind of left behind. It would the minor exception of some of the gains we've had over the last decade. Accounting really hit its stride with the mainframe computers in the 50s and 60s. And then with the advent of ERP, this kind of off-the-shelf accounting software that we're familiar with, the precursor was MRP. I think with that evolution into the business operations and away from the core accounting, we've kind of struggled to stay relevant in the software space and have not seen those big gains that you would have expected in a profession that, quite frankly, is as straightforward as ours, right? The debits and credits, like this has been around for our methodology has been around for 500 years. And that hasn't changed much. And so, but I do think the software has a long way to go before it really, brings these huge technical advantages to our profession.
Thank you. So, how do you see the changes in accounting and the accounting processes impacting the way that organizations manage their finances?
So it's interesting because we're in the core. I think, accounting is the language of business. And so we fit right into the core of that. I think a challenge that a lot of accountants have dealt with, especially recently, we've seen a decline in the overall number of people going into accounting. We've seen, CPAs that are leaving the profession. Technology's not keeping up. And so the big Band-Aid that we're all very familiar with, we're all experts on, is Excel, right? And so we plug the gap with Excel and we just work longer hours to get, the same job done that needs to be done. And so unfortunately, a lot of that, it takes us away from being able to step back and look at the bigger picture of the business. And so what we hope to do is really bring a lot of that automation back into the profession so that the accountants, the ones that are closest to the data, like can step back and really have a much bigger role in the management and the operations of the business and be a key partner instead of having to worry about getting all of the details correct and accurate. And of course, with the long hours and with Excel, there are errors that slip through. And so it's kind of boxed us into a spot where I think we can add a lot more value with the right tools.
I saw a website and it said, if you've got too many Excel spreadsheets running your business, you need to talk to me, which I thought was a nice way of explaining it to the end user. So what was the gap that you saw in the market that led to the creation of Netgain?
So it was, I was at NetSuite and, I was there and I was close to the product team. They would advise our group there, from time to time on different product decisions. And so I was close to the product team and I brought up this new lease accounting standard that had happened. Kind of a big, event for us accountants that happened internationally and it happened, of course, the U.S. had to go their own different route, but IFRS, adopted the standard IFRS 16, and in the U.S. it was a slightly modified version, but a lot of overlap between the two, which was ASC 842. And then, of course, here in Australia, there's AASB 16, which is very similar to IFRS 16. But this all came about. The announcement was made in 2016. I remember the very spot I was in when the FASB announced in the U.S. and the International Accounting Standards Board announced it internationally. It was very exciting. It came out, and it was, accounting for leases was very basic before. So basic that it caused, this off-balance sheet financing, a lot of problems with these big companies. In the early 2000s where, there was a lot of fraud happening and this off-balance sheet financing theme seemed to be kind of core across all these, big scandals, that were happening. And so, it was very basic and easy to do. And then, of course, the accounting standards boards, the pendulum swung, 180 degrees in the opposite direction and it became very complex. And so with this complexity, the idea was obviously there's a tool that's needed. Excel Maybe for one or two leases, you could get it to work, but like with the disclosures and all these additional requirements that came along with it, especially around modifications, that this would require a tool. And so I went to NetSuite to see if we could build it internally, and unfortunately, I don't think they had the appetite for it at that time. RevRec, the new RevRec standards had just come out and were being implemented, and so anyway, I figured it was evident that the only way to really get this built was to break off a NetSuite and build it on our own. So me and a few other partners broke off and we formed Netgain. That was back in 2018. So we're just closing in on our sixth year of business here. So we started with the lease accounting tool. It was very niche. And then over time, we created, adjacent products. With the lease accounting tool, there's your right of use asset, and then there's your lease liability. The right of use asset is very similar to a fixed asset. And so we added a fixed asset module and then have gone very deep that way. We added a loan module, which is very similar to the lease liability, and built a module there for borrowers and for, and lenders. And then we also we've got a close tool that helps manage the month-end close process for different businesses. So we started with lease accounting and then have evolved over the years, adding tools over time.
Excellent. So you very much Netgain is very much helping clients navigate the changes that came about through these lease changes in the accounting standards and sort of simplifying that process for them?
Yes. It's interesting. We've seen some pretty gnarly spreadsheets where people have been able to manage it and built in macros and some tools to try to get it to work in Excel. And we've taken those spreadsheets and then plugged them into the system. So there's things like the different types of modifications that you can have to a lease. Like you can change the rate, your incremental borrowing rate on the lease. You can change the term of the lease. You can change the payments. You can negotiate with the landlord and have a payment structure change, right? And all of these are simple on the surface, and they would have been very easy under the old standard. But now they create what's called a lease modification in the standards, but they're different types of lease modifications and they have a different impact on the remainder, the life of how you account for that lease. And so these modifications create a huge amount of complexity. And so much, in fact, that in the US, when COVID hit, there was a lot of lease concessions that were granted. Again, the landlord giving you a month free of rent in, middle of COVID is great and it helps benefit the business, but like it creates chaos on the lease accounting front because now it triggers a modification. And so a lot of these small adjustments to a lease contract can now, with the help of a system you can just make the minor tweaks in the system and then the system takes over and reruns all this stuff. So it really is the deep end of accounting for, even the most experienced chartered accountants or CPAs or controllers that have been doing this for decades. It's a new standard, and our view is rather than have these individuals focus and become experts on lease accounting, just get the tool and and instead of thinking about what type of modification am I running and what does the standard say about that, the system helps take that and automate it, and it makes it very transparent and clear for the auditors when they show up to see what happened. And yeah.
It's interesting. I was having coffee with a tax specialist the other day, and she said she was spending hours trying to figure out something. And I was like, is that really the best use of your time? Surely there are other ways that can be figured out, those sort of tax specialities. And sometimes it is through a solution and having the framework of working through a solution to get it out. So you're here in Australia at the moment, and you've introduced Netgain to the Australian accounting profession. What has been the industry's response?
It's interesting. So we almost from the early days, Australia adopted the standard, very early across public and private companies. And so this is no longer kind of a new thing here in Australia. It's relatively new still in the US. But we've had customers here since 2019, And so we've had a strong kind of growing customer base. We've had a strong partner community. And but our sales team, our support team, our product team have always all been in the US. And so this expansion really it really formalizes what we've already been able to accomplish here. We've been traveling down here and meeting with customers over the years, but the response has been, and I'm now personally dealing with the time change and the localization differences and like some of the frustration that comes with having to deal with an organization that's halfway around the world. And so we're excited to be able to provide more support to those existing customers that we have and those partners that have been with us from the very early days. And so the response has been very positive. I think it's been kind of a finally you're getting boots on the ground here. So I think had we done it differently, we would have done it years ago. But yeah, it's been very positive and it's exciting to be here personally and to feel that, the very vibrant economy and the activity that's happening and meeting with a lot of our customers and those partners. So it's been good to be here on the ground in person to experience Australia.
Accounting, and you clearly have a love for accounting. Accounting is a global language, and it's interesting to see it interpreted and absorbed and the nuances that evolve when you go to different countries, because you always, wherever you are and whatever you're doing, you're in your own bubble. And when you come here and like, the way they're doing things, etc., is all sort of nuanced, slightly different.
And our solutions, and that's what really we were really in kind of this magical era where when I graduated in 2005 with my master's degree, and I wrote my thesis was I took this course that was really interesting, international accounting course, and I wrote my thesis paper for that course on the globalization of an accounting standard. So back at that time, for those of us that are older, there were maybe over 100 accounting standards at the time. Like everybody had their own standards, and everybody thought, our different cultural values were kind of imposed on the accounting standards. So there are different things that were important to different cultures and around the world. And so, I mean, my assessment on that paper was there is no way that we are going to adopt a global accounting standard. So it's been amazing to see how the world has converged around IFRS, and a single accounting standard. And, of course, the US, again, it has to be different, but like there's this big focus on converging the two standards as well, which is where we get the lease accounting. I mean, that's a good example. RevRec is another good example of the convergence of those standards. So for the first time in history, when we solve these accounting problems, we're not solving problems for the US or solving a different problem for Australia or solving a different problem for India. These are global problems that we're now able to solve with a single solution. And so some of these markets that have been neglected now have access to world-class tools that wouldn't have worked for them in the past. And so we're in a very unique time in history with this convergence of accounting standards. And so when we solve these new problems, when we build our tools, we don't build them with a US centric perspective. We're absolutely thinking about solving these globally. And the nuances that do happen, there are statutory local differences that we need to work out in our solutions. But the gap and under IFRS and US GAAP, like the generally accepted accounting principles are very, very similar now. So for financial reporting, we can now solve these problems. And it's exciting, especially as we expand globally here. We really are in Australia, really is kind of the headquarters for our APAC expansion. And so we do have customers throughout Asia, as different culturally as some of these different jurisdictions are. It's fun to talk accounting because I think that's the core language. When we start to talk debits and credits, with the language barrier and the cultural differences, it is its own language, it is its own culture. And so it's exciting to different teams. We were on with a team from India a couple of weeks ago, and and we were geeking out over different pieces of functionality. So yeah, I like yeah, it's the one thing I think that brings us together as a profession, even closer now than we've ever been.
Absolutely. And accounting as a global language and sort of utopian accounting would see these standards be global and actually be the same globally, with the taxation side different. Of course, that is nuanced to the actual tax world. And I would really like to see that, because as accountants it allows us to actually travel and be flexible and move and work far easier. Like, I travel and work and everything, but it allows a lot more people that flexibility. And it also allows us to compare countries, compare country business performances like for like, if there is some more standardization in there. So what are the current trends you're observing in the ERP and the accounting platform markets?
There's one of the big trends that we're seeing. So if in thinking back, about a decade and a half ago, I guess, is when Gartner came out with this idea of the best of breed, right? And it was, as you build out your accounting landscape, as you build your, and not even your accounting, but your really systems landscape, you go in and you buy the best products, that are out there that fit your business needs. So when you're looking at an ERP tool, which sometimes gets conflated as an accounting tool, and anyway, but when you're looking at your ERP tool, get one that's best for your business. So if you're heavy in manufacturing, get an ERP tool that's best for manufacturing, right? And if you're heavy into e-commerce, get one that works for that side as well. And then just plug and play these different systems, and then the magic of the integration will fix all of you just integrate and tie all these systems together, and everything will be great. I think and that's worked to some degree or less with different businesses. But I think the acute pain that we feel on the accounting side with disparate systems that are kind of tied together, whether it's through Excel spreadsheets and uploads or whether it's through an actual integration, is it exposes us from an internal control perspective. So now, if I decide to, I've got my ERP tool here and I get, just use like a fixed asset solution over here, then, I can integrate those together and that's fine. But I need to make sure that I have controls around that integration and that I have controls around this new system that I've bought. And then, of course, my team has to learn the new system and figure out the nuances behind that system. And so there's internal control and then operational challenges with doing that as well. And so the big trend we've seen is there's a couple, like consolidating tools under one umbrella. So trying to reduce the system landscape as much as possible around the office of the CFO is a big one that we've seen. Reducing those integrations, reducing the learning curve for the your employees and your staff as they have to bring on new tools has been a big one. And then also trying to reduce the number of vendors that they have around that as well, so that they have more control around their accounting landscape. So you see that a lot, and that's where that's one of the areas where we come in is we come in and we've got all of our tools kind of under the NetSuite umbrella. They're built on the NetSuite platform. But I think more if you look at some of these other systems too, you look at Workday and you look at like Intact and you look at Microsoft. There's a big attempt to try to pull in more into their tools, whether it's through the partner landscape or whether it's directly building these tools into their systems. They're getting a lot more competitive. And this is where, you ask how we're doing over the last 10 years. I think we've made some large gains over the last 10 years just because there's more attention on the problems and the challenges that our profession faces. I don't think it's been fast enough, and I don't think it's enough yet. But I do think there's a positive trend in supporting the accounting profession more.
So how is Netgain differentiating itself in this very, very crowded market?
So we've got, it's interesting. There's two arms of our business. One is outside of NetSuite. We've got a tool, a lease accounting tool, that is down market, and it serves much broader customer base. So companies that are running on Xero and QuickBooks and Intact and some of the Microsoft tools, and MyOb, like they're running on this lease accounting system outside of NetSuite, and in that space, we really work closely with accounting firms. So the way we differentiate there is our deep partnership with accounting firms. We work with the audit side, where we give them our tool, and it enables them to audit these spreadsheets that their clients may have cobbled together. And then we also work with their customers directly, but it's really built for the compliance aspect of it. If you look outside, and then it's a low cost, solution that really makes it easy to migrate off spreadsheets without a significant implementation or a significant cost. And so we made that one really easy to use, really easy to migrate your data. And I think that's how we compete on that side of the business. On the NetSuite side of the business, it's really bringing our solutions under one roof. And having them all operating. There's this, with NetSuite, there's integrated partners, there's hybrid partners that have done some stuff in NetSuite, but they have some stuff sitting outside of NetSuite and they have an integration. And then there's built for NetSuite native partners. So ours are all native apps. So all of our code sits in, if you're running on NetSuite, it all sits in your account. You've got 100% control around that account. It looks and feels like native NetSuite. You don't ever have to leave that system. There's no data flowing back and forth from the system. So it's all under one roof. And so that's the big competitive advantage. But we found that, so as we built this compound product company, it's not as easy as just building a good enough solution that kind of sits under the NetSuite umbrella. Our customers demand a lot, and they're looking at high quality solutions that we compete against that sit outside of NetSuite. And so we found that we can't just create a good enough solution under the NetSuite umbrella, but we have to have best in class tools that also sit under the NetSuite umbrella. And when we build these best in class tools that are in NetSuite, it creates some pretty significant competitive differences from those others that are on the market.
So, Adam, could you share with us a success story of how Netgain has helped transform a client's accounting practice using your solution?
Yes. I'm trying to think of some specific companies that we work with. And honestly, we're one where we're effectively building the tools that we wanted to use as controllers and CFOs. So I think when companies migrate off of like Xero onto NetSuite, there's an expectation that there's going to be more structure around, the financial statements and the numbers. You're going to get data quicker. You're going to get data that you can rely on better, and you're going to have more structure around your accounting processes. And that is both true and not true. If you have bad processes going into it, and you don't change those processes, then, it's the garbage in, garbage out idea that if you don't, impose that structure around the new system that you implement, you're going to get the same bad data in the same, slow timeframes that you were used to getting it before. And so our net close tool is really that tool that builds that structure. So we've seen it over and over again where companies will put in the task lists and, the close checklists that they need that are very specific organization by organization. They'll put those in. And then, of course, you can get visibility, and we've got dashboards around seeing the movement of those tasks to completion, seeing where accountants are stuck, seeing where the bottlenecks are. And it just it creates rigidity, and it creates controls around the month-end close process. And so we've seen companies be able to speed up their close pretty significantly. And, with the balance sheet reconciliations and the flux analysis, all of these create more confidence in the numbers that you have. They'll catch errors, and it'll help you have more more integrity with your financial statements as they come out. And of course, with that task checklist, we can accelerate it. So we've seen a big move with organizations on the close side. Of course, lease accounting and fixed assets and some of the loan accounting, like they're just not spending near the amount of time that they used to. And so we're speeding it up and hopefully freeing up the staff to help them just have more time to really focus on the business. I think that's where we've got this these brilliant resources that work for us, right, in our organizations that know the details of the business, but just don't have the time to step back and really assist the business and help the operations team. So that's what I think we've enabled with different customers. And we've got large customers that operate globally that we've been able to help out with. We've got and then we've got smaller, very small companies that have been able to leverage some of these resources. And our mantra is to just make these things as easy to use as possible so that you also don't have to learn a new system when you implement these tools. So
absolutely. Thank you for that. Now, are there any other, and you have covered a lot, and there may not be, but are there any other key features of Netgain's products that you think customers really find beneficial? You have covered a lot, so there might not be any others to touch on there, but
there's one, and this is kind of a unique area. That a lot of users that might be on Xero, might be on QuickBooks or MyOb, like that they may be just kind of used to the bank reconciliation process. And I've been talking a lot about bank recs lately because it's something that as you go up market, it's fascinating to observe the differences in bank rec tools. So if you want to look at if you go to SAP or Oracle, like the bigger the system, what you'll find is the worse the tool is in those different markets. And it's interesting how tolerant we are sometimes as accountants, especially with these big, expensive tools. So, these big tools don't have very good bank rec processes as well. And as you go down market, interestingly enough, they become better. But as you migrate onto these, higher performing accounting systems or ERP tools, you'll find that there's a downgrade to the bank rec process, and there's no good reason for it. Like, of course, the bigger the company, the more bank accounts you might have, the more transactions you've got to reconcile, the bigger the need you have for it. But also these companies are able to just throw more resources at the problem. And so we have heard directly a lot of complaints from customers that migrate onto a better system, bigger, more robust system like Intact or like some of the Microsoft tools or NetSuite. They lose a lot of the functionality that they had on the bank rec side. And if you look at the different bank rec tools like we have, it's interesting how best in class a tool like Xero or a tool like QuickBooks is when it comes to bank reconciliations. There's for all the weaknesses that those solutions might have, they are very strong on bank reconciliations. And so we have set it out and kind of made it our mission over the last year to build a tool that's easy to use, intuitive, that's absolutely best in class, but that has a lot more of the power around creating the rules and the automation engines that the bigger companies might need. There's things that you'd never really come across or need to have in Xero or QuickBooks, like when you transfer cash from one bank account to the other across multiple subsidiaries or entities or countries. Like we built it so that when you execute a transfer, like all the back end intercompany accounting is automated, and if it's a foreign currency that you're, one currency to another, like that we handle the foreign currency settlement and things like that. So there's areas where we want to make it stronger, more enterprise, but there's also areas where like the bank integrations, like pulling in the bank data, and then automating, as much of the reconciliation as we can, and then having the resources on the ground kind of focus on just the outlier transactions, which is where the attention should be anyway to resolve some of those issues. So we focused a lot on the bank rec, and I think there's areas where QuickBooks and Xero are good. Again, best in class on bank recs, but there's things that we're doing where we're kind of innovating on the bank rec side. One is this frustration, and I years ago when we started Netgain, like I did a lot of the accounting myself, and it was weird to go from understanding my personal finances just very well to going and starting a company. And now we've got payroll, we've got rent, and then we've got customers that are paying us, and I'm not quite sure when those checks are going to arrive. And like, we've got all these moving pieces to completely lose visibility into our cash runway as a business. And so oftentimes I found myself on the back of a napkin writing down when I think these invoices are going to come in, and when what we have going out, the expected outflows, and then referring to the bank account for my cash balance, minus whatever outstanding transactions I might have. It was very rudimentary, like unsophisticated. And I think we tolerate a lot of that too. So like moving the bank rec from a month-end process where you might have it done on day 5. So now if you think about that, you reconcile your bank account on day 5, you never know how much money you have in the bank account. Like, you've never really settled everything. And so moving it from a month-end process to a daily process is a big, process that we've baked into our tool, so that the executives or the entrepreneurs or the owners of these businesses have on their dashboard, real-time access to what, the cash is and whether that's been reconciled or not. Is it red, yellow, or green? If it's green, they can have confidence in it. If it's red, they know there's outstanding transactions that the accounting team hasn't settled yet. So we've done a lot of thinking in like how this bank rec process should work, especially in this new world of open banking, where we now have transactions globally that are now, we're able to feed in and have integrations and pull data in through the open banking kind of revolution that's happening. So there's a lot that we're doing there, and bank recs are very exciting for me personally because I think it has a big impact on, it's a big headache for a lot of people, especially as they migrate up to bigger and better systems. It feels like they're 2 steps forward and 1 big step back on the bank rec. And so we aim to like not take a step back on bank rec, but like accelerate that forward. So
it probably is shocking for a lot of people who are working in the small business accounting world to actually hear that that's actually what is happening in the large business accounting world. And definitely timely data leads you to informed business decisions, which you don't have that opportunity to access if it's month-end type of it's only been reconciled on a monthly basis.
Yeah.
So,
and you said shocking. It is very shocking in some cases where they're like, wait a second, I had this all dialed in Xero. Like I had it, and now I've got to go back and do a lot of the stuff manually. So yeah.
They would assume it would happen. They would assume it's getting better, and in fact it's not in some respects. Yep. Let's talk about AI. So how have you integrated AI into your products and services? And if so, how, and how are you rolling that out?
So we spend a lot of time focused on AI. I think it's one of the most exciting things that's kind of happened to our profession. So there's a few things that we're using right now. So one is for lease contracts. So you sign a new lease. You've got, this 120-page lease agreement with all sorts of mumbo jumbo in the agreement. And so what we've been able to do is you can take that document, that PDF doc most of the time, and just upload it into our system. And our system, we've got it, so it gets entered into an AI engine that will read through the document and then, of course, pull out the relevant sections around like what the lease term is, what renewal options are baked into, what the monthly payments are by year, as those escalations happen, and what the deposits look like, and so it'll pull out all the relevant data from the lease agreement and then populate it in the system. And so, of course, like AI is great and it does a very good job of identifying those areas. Of course, there's still a review. You want to go back and look and make sure it's actually got the right data, the right dates and things. But it does a really good first pass at that review and saves a lot of time for companies that are heavy in leases and, even companies that aren't heavy in leases. It helps really give you assurance that you're not overlooking different aspects of the lease agreement. So we've got that tool, and that one has been around. We've been using that for a long time, maybe over a year now. And then on the back end, this is one that's to me super exciting. So we've got our close tool, and we've got the flux analysis that's done. And so for those listening that aren't fully familiar with the flux analysis, it's where you look quarter over quarter or month over month or year over year. You're looking at the difference in, like, let's say rent expense. You're looking at all these different accounts. And if it's over a certain percentage or a certain dollar amount, the accountants dive in and investigate why, let's just use rent expense as an example, why rent expense doubled.
I'll jump in and say, I think in Australia, we use the term trend analysis for people who are listening.
Oh, see, perfect. Yes.
I've had this conversation before because I was like, I know of a flux capacitor in the Michael J. Fox movie. What was it? Back to the Future. But yes, you call it completely flux, but we call it trend. But
trend analysis. Honestly, trend analysis perhaps makes a lot more sense now that I say it out loud in my head.
I do like that there's Michael J. There is Back to the Future in there. Themed you're reporting though.
Awesome. So the trend analysis. So we've got a tool that will pull, the differences, like, you'll be able to run it for whatever period to whatever period and pull it out. And then you can see the differences. So if it falls below your threshold, it's a pass. If it's over your threshold, it requires an explanation. So rent expense, let's say rent expense doubled, month over month. There's obviously some underlying reason. And so typically what you do as an accountant is you dig in and you would look at the underlying transactions for last month, underlying transactions for this month, and see what's different. Of course, in NetSuite, that's super easy to do. You can just drill in and take a look at all that data. But where you've got a high volume of transactions, sometimes a lot of the nuance and detail gets missed. And sometimes as accountants, we just roll forward last period's explanation. And oftentimes that's the right explanation. And sometimes, there's nuance to it. And so what we've been able to do with AI is, and especially because we're embedded in NetSuite, so we have all the transactions for last period and all the transactions for this period. And sometimes that's thousands of transactions. We upload it into the AI engine, and the AI engine will review all last periods and all this periods, and it will spit out a variance explanation from last period to this period and will give you a high level summary. And then oftentimes it'll spit out very specific transactions that you had that you didn't have in the prior quarter. And then you can even feed it more data. So, you may say, well, okay, rent expense doubled, but we did have, we've got 20 leases and we added 2 leases, and you could put that in and it will add that into the explanation. And then it will kick out the transactions, and you can see it'll even identify duplicates. So you may have accidentally booked last month's and this month's in the same period. And that's why, you've got a big doubling of rent expense. So, it's to me, it's super cool. It gives you, it catches a lot more of the errors that may have gone overlooked if you're just doing a manual review of all those transactions. So I think it's a great use case for AI. Now, as we look forward, I think we've got some big opportunities. This open banking revolution that I'm talking about. So Australia was an early adopter. So there's legislation that requires banks to, allow you to feed data, pull your data out. And so we're able to leverage that. And we've got customers that are now able to grab all their data from the Australian banks and pull it into their NetSuite system. And we've got that part of our BankRec tool. But if you think about some of the challenges that we struggle with, a lot of the tools that have come out are kind of top level there, right? Looking at all the data in a system. But if the data was bad coming in, you're not going to get a good analysis of that data on top. And so we think where AI is really valuable is on the ground, looking at those root transactions. And that happens at the bank level, it happens at the credit card level. So really, this combination of open banking combined with AI and the ability to look back over the last 5 years, worth of transactions and learn from those prior transactions and apply it to these future transactions from a coding perspective, we view this as having a huge benefit to the kind of the bookkeeping side of our profession and being able to do a lot more with a lot less on the bookkeeping side and still have a very high level of accuracy. You see a lot of companies that do AP automation and they dabble with this. I think AI is going to flip that, that side of the world entirely, because some of the, especially with these transactions that we're able to bring in and read. So exciting times. I think we'll see a lot in the next 5 years.
And you'll just be able to move so much faster than the person who is in those spreadsheets and not getting any of that information surfaced for them.
And it's interesting because I see areas where AI, can make redundant a lot of different professions. I feel like we are so understaffed. I just don't see that happening. I see what it will do is really take the monotonous side of our profession and automate it and enable us to do much higher value add activities. There's such a shortage, like there's so many demands being placed on us. I think by pulling off, some of those lower value add tasks, we can,
And it's globally, and it's in Singapore, it's in Malaysia, it's in the UK, it's here. There is such a shortage, and accountants have so much opportunity out there. Bring on anything that makes our life easier because we're all working too many hours.
I know.
So let me just before we are wrapping up here, you have listed the book Double Entry as one of your favourite books. Now, is that the Double Entry book by Jane Gleason White?
Jane Gleason White, who is here in Sydney. Yes,
she is. I wondered if you'd caught up with her. Have you caught up with her?
I have not. No. I wish I had, and I may try to meet her because I am a huge fan. It's it goes into the history of accounting. I think a lot of it, is lost. Like we show up, we're trained how to do double entry accounting. We take it as, just that it's just, kind of a thing that's always existed, but it was actually invented and it was, and we've had, our profession's had an interesting history. And I think we played a major role in the development of some of these global superpowers that have emerged, right? It was the Renaissance was the first piece. And then the Netherlands and the rise, of the Dutch East Indian Company and the modern corporation. And then England and the UK and their kind of global dominance for a while. And then the US, right? And I think double entry accounting has been behind some of these massive market accelerations and behind a lot of the progress that we've seen, as society. And I think it plays a major role in everything we do. Sometimes we get tagged as the bean counters or there's a lot of derogatory terms about us, with our green visors and our pocket protectors. But we come like we're
superheroes. We're superheroes.
We are.
I have a copy of an autographed copy of her book down there.
You do?
I just wasn't sure if that was the book that you were referencing. And look, I always say accountants are superheroes, and we save livelihoods. We don't save lives; we save livelihoods. And such an important part of the small business community and the community at large. So, Adam, is there anything else you'd like to share with our listeners, and how can they get in contact with you?
No, this has been a wonderful discussion. Thank you for taking the time with me today. So you can absolutely get in contact with us. Our website is netgain.tech, TECH. And then the big thing is if you're on NetSuite, we definitely can help you. And then if you're not on NetSuite, I'm biased. I am a huge fan of NetSuite. I think, it's a great platform. But if you're not, and you have lease accounting problems, then we can definitely help you there as well. Even if they're minor, we've got a super cost-effective solution, and you can reach out to us. We're on netgain.tech. And you can find us there. We're on LinkedIn. We're kind of everywhere. And so, yeah, please reach out with any questions and any way that we can help you. We're happy to do it. And we're here in Sydney now. So very exciting.
Very exciting. Adam, thank you so much for joining me on the Accounting Apps podcast.
Awesome. Thank you very much, Heather.